Hello everyone. This is the pre-market report video for today, 8th November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Before going to the US market, first I want to highlight the new banking loan insolvency resolution process that was proposed yesterday by IBBI, Insolvency and Bankruptcy Board of India. And that might explain why it is negative for banks and mainly HDFC Bank. In general, they proposed 5 changes in rules and these are the list of those 5 changes. Here, let's ignore the 2, 3 and 4 since those were just extra government bureaucracy and paperwork, and of course it will delay the insolvency, but I don't want to go there yet. So other than that, let's just concentrate on 1 and 5. 1. Separate bank accounts for each project. Here, this is clearly not a value added for any bank. Now, if anyone wants new loan for any new project, they will get in the same existing company account. That in future going to be multiple account since the same real estate developer will develop multiple projects at the same time. Think for a second, I'm a developer. I took 10 loan for 10 different projects in one bank and similar 10 plus 10 loan on 2 different other banks. Thus, this will create a kind of mess and more complex for bank to track my overall risk exposure and my liquidity details since each bank has to be vigilant enough to know all my different 30 odd accounts and to link all my accounts together. This requirement could lead to increased multifold administration and also the number of working people for banks. So that's the first point. It's clearly very negative even for the normal functioning of banks. Then the 5th one, protection of possession for home buyers. Here, don't scold me. This law clearly very much favors the people but not for banks, especially not for HDFC Bank. So far in India in the housing mortgage, if people can't able to repay the loan means, then the bank will take the possession of the property and auction that property in the open market. That was straightforward, comparatively very easy to recover money, and Indian banks really enjoyed those since those who took mortgage were not Vijay Mallya or Nirav Modi. Now, in this new proposed new rule, the properties in the possession of home buyers will not be a part of the liquidation estate, which means banks and other financial creditors might have less collateral to claim against outstanding loans, which might lead to increased NPA and to potential loss as well. As I said, HDFC Bank got huge exposure on this housing space, and that's one of the probable reason why HDFC Bank and Bank Nifty was very much volatile yesterday. Again, in line with that in the US market, all Indian areas, particularly both banks areas, closed negative. Here, please note, HDFC Bank ADR closed over 1.5% negative. Then in terms of IT, it closed in line with the Indian market or marginally more down, but not a big deal. But the real issue is in the banks. HDFC Bank ADR closed over 1.5% negative despite GIFT Nifty traded positive at that time. And also today in the early morning around 3 am, GIFT Nifty closed at 19,496, near 40 points higher, so indicating 20 to 30 points gap up opening. Then in US market, 2 FOMC members last night made the statement that they were not done with rate hike cycle and in future more new rate hike is necessary to bring the inflation down to 2%. However, market didn't care. 10-year bond yield made its 5th decline in the last 6 sessions on the expectation that the Fed is done with its rate hike cycle. And also the Fed monitoring tool increases its probability to 90% chance that Fed will pause the interest rate in the upcoming December meeting. Because of all this, for the 7th straight session, US market closed positive, but still S&P 500 haven't crossed the 4,400 and for the second consecutive day, it took the resistance there. At the end of the day, Dow Jones up by 0.17%, S&P 500 up by 0.28% and Nasdaq increased by 0.9%. In case of US VIX, it's same for last 2 days below 15. Regarding oil, even on yesterday's video, we discussed about it. On Monday, Rogers predicted negative Chinese trade data, which in turn wiped all the Monday morning oil price gain. Yesterday morning, in the actual original data, China's export contracted more. It's over 6% for the 6th consecutive month in comparison to expected 3% contraction. which indeed created the oil demand concern and in turn made all the Asian market down and the oil price to collapse over 4%. At the time of this video, Brent crude is trading around $81.5 per barrel. In comparison, day before yesterday, it was around $85.5 per barrel. And WTI crude is trading around $77 per barrel compared to $81 per barrel on day before yesterday. Thus, in oil price, it's clear 4 to 5% down in one single day. So that's all about the global market. Let's see the India specific info. First, about Reliance. I hope the regular viewer remember this. Last week we discussed there was a rumor that Reliance is opting for over 20,000 crore new rupee bond sale. And yesterday that became true now and it's not a rumor anymore as Mukesh Ambani filed the filing with SEBI for the $2.4 billion worth of new rupee bond sales, which in turn increased the Reliance debt and thus it's clearly negative. In line with that, Reliance GDR dropped 0.7%. So let's see how Indian market is reacting to it. Then in terms of earnings, Shree Cement, Apollo Tyres and Cummins India released their earnings in the aftermarket hours and all three did beat the analyst estimation. Moving on, about institutional activities, again and again FIA was net seller. Yesterday the net sold for another 500 crore rupees and as usual DIA net bought for 700 crore rupees. Then as per stock open interest, Apollo Tyres, Bata India, Bank of Baroda, Atul, Bajaj Finance and Tata Chemical got an increase in open interest along with a negative close indicates the short build-up. On the other hand, it's Indian Oil Corporation, Trent, ONGC, Escorts, BPCL and Hindustan Petroleum, basically all oil stocks plus some, got an increase in open interest with a positive price close indicating long build-up. As a summary, US market closed positive and GIFT Nifty indicating a gap up opening. However, Reliance GDR closed 0.7% negative and both banks and IT areas closed significantly negative. Honestly, don't know how GIFT Nifty is indicating positive trade if all these were indicating negative trade. So let's hope I'm wrong. Regarding the things to look out, today Lupin, Tata Power, Oil India, Bata India, BHEL, MCX and Nazara Technologies are some of the major Indian companies' earnings results are scheduled to release today. Regarding macro, around 12:30 pm, Germany's inflation data is due and in the aftermarket hours, Europe retail sales data is scheduled to release. In case of US, mortgage rate, crude oil inventories and mainly US Fed chairman's speech are some of the items we need to keep an eye out today. Coming to technical, Nifty opened almost flat, but there was a significant volatility caused by Bank Nifty, then hit the intraday low 19,329 around 12 pm. Then immediately Nifty started to recover as Bank Nifty recovers and for the second consecutive day it closed near the day's high of 19,420. But the post-market correction, it snapped a 3-day rally and made it to close with 5 points negative 19,407. Thus, on the daily chart, it formed a doji kind of candlestick pattern, which clearly indicating the tug of war between buyers and sellers. On the positive side, it managed to sustain above 90,400. However, again for the second consecutive day, it continued to face resistance near 19,450. As I said yesterday, it coincides with the 50-day EMA exponential moving average. So, 19,450 to 19,500 is the crucial resistance zone. And at decisive close above, it might propel the rally further upwards till 19,690. One more thing, at present the hourly momentum indicator has also triggered a positive crossover from the equilibrium line, which indicates that it has started a new cycle on the upside. Then on the downside, 19,300 to 19,270 will act as a crucial support zone from short-term perspective. In case of Bank Nifty, it too had the similar price movement as Nifty, but far better than as yesterday it increased by 118 points. Thus, on the daily chart, it formed a bullish candlestick pattern with long lower shadow indicating support-based buying. Anyway, now Bank Nifty cleared the huge hurdle. The resistance 43,700 and so now all eyes seem to be on the 44,000 mark. So the sentiment seems to be positive and the setup looks favorable for further upward. Even yesterday on the downside, 43,300 to 43,200 acted as a strong support. So 44,000 on the upside is an immediate hurdle. 43,300 to 43,200 is a good support. On the weekly options data front, the maximum call option open interest was at 90,500 strike, followed by 90,600 and 90,400 with new maximum call rating at 90,400 strike, then 90,500. While on the other side, the maximum put option open interest was at 90,300 strike, followed by 90,400 and 90,200 with new maximum put rating at 90,400 strike, then 19,000. Thus, from the options data, it also indicating 19,500 to 90,600 is likely to be the key resistance zone with 19,300 as support, but in between 19,400 seems to be crucial for either side of the trend as a trend decider. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.